Hello traders, you are highly welcome in my channel, and I'm happy to have you here in this channel whereby we learn more about forex trading, how we can download money from internet. I'm just so happy that I am here with you again. It's me, Atop Forex. Write down in the comment and let me know if you can hear me clearly and properly. I'm happy that I'm here to share with you about the risk of trading major pairs. The major pairs that we always like trading can also become very risky for us in case we don't learn how to manage them properly. The major pairs like GBP USD, USD JPY, those are the major pairs I am actually talking about. Those are the pairs that are mostly traded worldwide, but in case you don't really trade it well, you will cry. Oh, I'm here to really let you know the risk of trading such pairs. Let us dive in. The major pairs, they are really so volatile. Yeah, especially this goes to the beginner traders who really don't know much more about the behaviors of the currency pairs. So this content will really help you a lot. So as I said, they are very volatile. What is volatility in the market? This is just much more about the movement of the price in the market. We have some pairs like GBP, USD are really known for their volatility, which can really lead to more significant price swing. Traders should really be prepared for more rapid movement in the price if you're trading a pair like that. It's not only GBP USD, but there are also some other pairs that are more volatile, and those are generally the major pairs. You can do a little research as well to find out more about the major pairs, but I already told you some few. Secondly, we have something called liquidity. If you cannot spot the liquidity in the market, then you are the liquidity. There's a trade that I placed since morning hours and still running up to now. After this content, we shall dive in a chart and I show you the analysis, how I analyzed the trade and actually why I took that trade. Let us first talk about the liquidity. The major pairs normally and generally they offer high liquidity. That can only be done at the right session whereby the market is open for that particular pair. But when the duration or the trading session is off, the liquidity can also really decrease, leading to wider spread and potential slippage. At the right session, those pairs have a lot of liquidity and then the spread is also tight. But then when the session has passed away, the liquidity decreases and then the spread widens, leading to slippage. And then number 3, let us go to economic events. Yeah, so these major pairs, they have economic events of which you as a trader you have to be super careful. Otherwise, this is where you will blow your account. You should always check the economic events before you take any trades so that you can either avoid it or take the risk of trading during that particular event. Unexpected economic data releases or geopolitical event can cause sudden market movement. Staying informed about these economic events and having solid risk management strategy is crucial here. As I explained at the beginning, you should have a proper risk management check on the events so that even if the news is released, you are aware and you know how to handle and take care of it without blowing your account. Let me hope that this content has helped you and kept you informed. In case you have liked the content, please remember to subscribe, like, and then share. Let us go in the chat and then we see. Yes, traders, you can see that this is a Euro JPY. Yeah, I took this trade early in the morning. However, it is on 5 minutes. It's quite surprising that it has really taken that so long. We shall do some top-down analysis here. Let us start with 1 day. Okay, yeah, the maximum time frame that I have here, it is actually 1 day time frame. On 1 day time frame, you can see that this site, let me get my stuff. Yeah, let me get my pointer and use it here. So you can see that from here, this trade kind of went uptrend here, making swing low, swing high, swing low, swing high, swing low, or higher high, higher low. But then reaching somewhere here, this trade started to consolidate, okay, or making range movement in this area. It was just going up, down, up, down, up, down without passing anywhere. Yeah, but then when I place that as a support, okay, and this one here as a resistance, you could see that the price could not pass. Okay, this is making low high, low high, low high. It was just performing supply and demand. Then it eventually broke, taking up direction, coming to mitigate this resistance level, but the price has not reached in that resistance level. It is still moving. As you can see that the gap is still there. Okay, let me zoom it for you and you see the gap. I'm meaning as in this gap here, it is still there. Okay, it has not yet mitigated on that resistance level, but it will come there and mitigate it. Let us now go to 4 hours and we see this movement was so steep. Yeah, I'm making high, high, higher, low, high, high, higher, low, or swing high, swing low, swing high, swing low. And then eventually this trend was a little bit broken. Okay, as in, if I draw it that way, let's make the trend line. Yeah, that trend line was eventually broken and made a shift in the market direction. Yeah, broken from here, and then it came back and retested, and then it broke completely here, but still it didn't actually change direction completely, but it still kept moving uptrend. Yeah, just change direction a little bit, coming to mitigate this resistance level. And then 1 hour, yeah, this is actually our movement. Okay, our price now on 1 hour, you can see that a lot has happened. Okay, a lot has really happened. This is not the other trend line I drew. Okay, the other trend line I drew was that one. The price is simply moving like this because it wants to mitigate that resistance level. As I told you, on 30 minutes we can see clearly what the price is doing. Yeah, so I was able to spot some order block. Okay, I spotted this order block here and I marked it, and then on 15 minutes, okay, I saw the price moved and came to mitigate this particular order block at this support level. And then I had to mark this order block before the price reaches. I first drew my trend line, yeah, because I saw that the price is respecting each and every area of interest, or respecting every order block on the trend line. The price has not broken below the support levels of the trend line. It is always respecting those areas. Okay, because these are the order blocks here. As you can see, the price has not broken below it. It's always respecting. Yeah, that's why I was able to mark this order block from here. Okay, with confidence, waiting for the price to come at that particular order block and then respects it. On respecting it, I looked for the confirmation showing that the price will further move up, and that was clearly seen on 5 minutes. Okay, let us zoom and we see. So you can see that at this particular order block, the price came and made a big engulfing candlestick. So you can see that this green candlestick has engulfed this red one, yeah, and it also made a very big movement just right there, but that was not enough. And then I had to wait. Okay, I first had to wait for the price to move a little more because I'd already seen the confirmation that the price will go uptrend from here, yeah. And then on waiting, I saw the price has come and broke above this structure. So after the price came and broke this structure here, okay, and then I had to take my entry, just waiting for the take profit to be hit. Yes, traders, let me hope that you have learned a lot in this video, and if you have liked it, remember to subscribe, like and share. And this trade is still running on. I will leave it until it hits my take profit. Subscribe, like and share. I will see you in the next video. Bye.